I'm going to introduce our guest for today, Dylan, who's the head of research at Altan Insights. Dylan, welcome to the Alt Show.
Alan, thanks for having me back on. Excited to be here.
It's a pleasure to have you on. Okay, I want to start here. Dylan, can you start just by briefly reintroducing yourself to the public audience? I know you've come on one of our shows before, and just tell us how you got into alts and then what you do now at Altan Insights.
Of course, yeah. Hi, everybody. Thanks for joining. Basically, my journey into the alts world started in sneakers. I am a longtime sneakerhead, and a few years back, I was working a job in the traditional investment world when I noticed all of these really interesting things happening in sneaker resale marketplaces. And there were all of these kind of economic and competitive and strategic forces that I would see in my kind of traditional investment day job. And so I set out to explore those a little bit further and ended up writing a book about kind of the economy of sneaker collecting and how that hobby has given rise to all sorts of entrepreneurship and things of that nature. And that interest in sneakers as collectible assets was really my gateway into collectible alternative assets of all kinds. And so about a year ago, I linked up with Altan Insights. And basically our role, as we see it, is to provide data analytics and research to help people make smarter decisions when they're investing in or collecting in these different kind of collectible asset categories. And so that works both fractionally for people who invest in those types of assets fractionally, or for those who collect them outright. So we really kind of provide research on all of those different categories and try to understand the different dynamics that shape those markets.
Incredible. And I would like to double down and say, I think when it comes to fractional investing, alternative assets is relatively new. And I think Altan Insights do a great job of kind of providing some education and some clarity on what's happening in these markets as people are trying to figure it out. So anyway, I know that you recently wrote an article on Altan Insights. For those that are interested, it's called the Q2 Fractional Performance Recap. Can you kind of just give us, Dylan, the headlines of those articles? Like what is some of the developments, trends that we saw in the first half of this year in alts in fractional space?
Of course, yeah. So the first quarter of 2022 was really kind of best described as steady, where a lot of these collectible asset classes were kind of flat or experiencing either single digit positive or negative performance. But in the second quarter, that all changed, right? As it did for so many different types of assets, stocks and crypto certainly among them. Collectible alternative assets were definitely challenged in the second quarter, particularly as they're traded fractionally. We saw many asset classes selling off 10 to 20% or more. If you're looking at, something more volatile and a little bit newer and more linked to crypto, NFTs had really difficult performance in the second quarter, but it was really widespread both across, newer asset categories and ones that have been around for a long time. And I think what you saw happen was, investor sentiment just became extremely negative as people became concerned about the economic implications of inflation, of the Fed tightening up monetary policy. And so they started kind of selling these more speculative assets, and that fear kind of begot more selling, and selling led to further kind of drawdowns in these assets. And so really in fractional markets, selling pressure was pretty widespread. That's not necessarily the case if you look at kind of the markets for these assets outright. So people who are buying them and selling them at auction, kind of the whole assets, that performance really varies by category. But we saw some assets kind of trade off very quickly, sports cards among them. And we saw other categories hold up relatively well. Sports memorabilia held up relatively well this quarter. Art had an extremely high volume quarter and held up well, and wine and spirits continued to experience good performance. So mixed, but as far as trading these collectible assets on fractional goes, it was definitely a challenging quarter, as it was for many other assets.
One thing I found really interesting as I was reading the article was I think when we talk about alts, a lot of it comes from the perspective of like, it's great to have a diversified portfolio. Obviously, a lot of people now have crypto, they have stocks in their portfolio, and now they can add alts. I think one of the things you pointed out in your recap is that, especially in the fractional space, alts have performed in a similar way as what we've seen in stocks and crypto markets, which have obviously been really hard hit. Can you kind of just, how can we think about how correlated or alts have been versus stocks and crypto, like historically, and then also what we're seeing at the moment?
Yeah, it's a really important point. So I'm glad you've raised it. I think historically the allure of so many of these asset categories was that correlations to traditional financial assets like stocks were extremely low, and that was true especially in times of financial and economic stress. So there are long track records for many of these categories of holding up well during recessions or during stock market drawdowns. But I think that the interesting thing is now we live in this moment where there's been so much innovation and so much advancement and some really cool things happening where, everyday people who previously didn't have access to these asset classes have that access. But not only that, but they're able to kind of trade in and out of these assets relatively quickly, like you would in stocks. Certainly there's still a lot less liquidity and a lot less activity in kind of fractional alternatives than there is in stocks, but it's still a really unique and new time in that you're able to kind of trade freely in and out of these assets. Now, I think the flip side to that and kind of the troubling part of that is when assets are enabled to trade in kind of similar ways to stocks do, they might end up performing more similarly to stocks. And, this is just one episode, right? But what we saw was, fractional collectibles performing very similarly to stocks because I think at the root of it, performance is kind of driven by investor psychology. And that applies to fractional collectibles just the same as it does with stocks, where when people feel uneasy about the economy, they get a little more nervous about holding certain assets. They want to kind of get some dry powder, sell, get some cash. And I think that took hold in fractional collectibles. The question is that how things go longer term? Is that kind of the new normal? Or is this just, a unique episode where things are kind of resetting, a little bit of speculations coming out of the market, and then we kind of grow from that foundation?
Okay, yeah, I think that's a really interesting point, is the difference between the short term versus the long term. I'm curious, from your research and then also your personal opinion, how do you think it shakes out long term? Do you think we're going to see that with the greater access, with the reduced friction that is now in some of these alternative asset categories, in the long term it's going to perform similarly to stocks, or do you think something different?
I think over time, as there's a greater level of kind of education, a greater level of understanding of these different categories, as more people get involved and understand them better, I think the correlation won't be, it's not going to be one for one, but it's also probably not going to be quite as low as it has been historically. I think, one of the big kind of impediments to correlations being higher historically has been that people just haven't been able to kind of sell and buy in and out of these assets as easily as they are today. So I think the correlations are probably going to be higher than they have been historically. But that being said, there's a lot of reasons why certain asset classes shouldn't be hyper correlated to stocks or to crypto or to tech stocks in particular, and those factors should prevent a very high correlation and still kind of give that benefit of very diversified performance.
Okay, that's great to hear. I want to get deeper into the asset categories themselves and some of the performance that we're seeing there. Can you just outline for the audience what, from your research, did you see as kind of the best performers over this period? And then on the flip side, what were some of the worst performers? And then also, do you have like a thesis as to why that was the case?
Yeah, I think on the strong performance side, two categories that stand out in particular over the first half of the year are art and wine and spirits. I think that's particularly interesting because those are really the two categories with the longest track records. And when you see data on low correlations, it's those categories that are often cited. And they really do have, kind of a proven and long record of delivering differentiated performance. In the art market, we saw, record auction volume in the spring. Value still held up really well. You still saw people paying, 60 to 70 million for single works of art, in some cases, getting up to 200. So still a really healthy appetite, especially from ultra high net worth collectors and investors for fine art. And one thing we see with art in moments of distress is, lagging performance tends to come into play a little bit later than it does in stocks, but there's also less volume in the market. So people aren't as eager to sell when kind of things go south. And so that helps the market kind of hold up. And then it's a similar story with wine and spirits, a long track record of kind of performing very differently from stocks and traditional financial assets, and offering uncorrelated performance. If you look at indices tracking kind of the fine wine market, you're seeing performance year to date that's up, 10 to 11, 12%, which is really remarkable when you consider how many markets are down, double digits. And so it's just a different buyer. It's often kind of an ultra high net worth buyer who's a little less concerned about, how the economy is performing, how the stock market's performing, whether things are up or down, they're still buying their fine wine. So those are two asset classes that have performed really well. On the downside, kind of leading the way has been the NFT category. And I think, a lot of people are familiar with what's happened in crypto over the past few months. Certainly that's an asset class that has reset, and people have kind of reassessed the risk they're taking there and kind of unwound those positions. And so NFTs have suffered from that as well, and those values have come down quite a bit. And so those are kind of the key areas of top performers and lower performers that I'd highlight for this quarter. I think, and it kind of stands to reason. On the high side, you have things with very long established track records, and on the low side, you have kind of newer things that people might associate with taking greater risk.
I think that's a great insight and a great kind of overview. I'm really curious to find out, say, I'm someone in the audience. I'm a public investor. I have a portfolio on public. I hold stocks. I hold crypto. Obviously, alts is coming to public in the next few months. And I'm kind of looking at the different categories, and I'm thinking about, okay, I want to diversify my portfolio. I preferably want something that's not too correlated with stocks, crypto. What are some of those factors that I should look at and consider as I'm thinking about what categories to get into? Would you say? I know you mentioned like the history, like the track record of performance. What are some factors that you would say are good to look out for?
Yeah, I mean, aside from kind of the track record and the history of financial returns, I think you also want to be thinking about, what do kind of like the buying pools for these different asset categories look like, right? And how are those demographics changing? So, for instance, in art, that's held up really well because there are, ultra high net worth investors who continue to kind of accumulate wealth, but it's also been bolstered by, increasing appetite and demand that's coming out of Asia. That's been kind of instrumental in that asset class's performance over the past few years. And so there's these demographic things you can think about that might inform how an asset class is going to perform. Or for example, if you want to look at something other than art. So if you were looking at sports cards, for example, there's a lot of people who kind of grew up, collecting cards and not doing anything too serious. But now as they kind of reach their peak earning years, they're returning to buy those rookie cards, those expensive cards that they couldn't afford back when they were kids, and kind of treating those as their form of art. And so I think there's some interesting ways you can think about demographic trends to inform how you want to think about an asset class long term. And I think that's something you've seen in comic books as well, where you have this generation of fans who've really embraced kind of like the Marvel movies and become super fans, and they want to return to the source material, the comic books themselves, and have those as part of their collection. So I think demographic trends play a pretty significant role. And then apart from that, I think you just want to think about how different categories might be affected by kind of, different economic conditions. Which ones have been viewed as, inflationary hedges, which ones have been viewed more speculatively, where they kind of go up and down with the economy. And we have a lot of that data that we share in our reports and on our platform to help people kind of wrap their heads around that.
Yeah, I think one of the I think it's such a great point you make around like the different buying pools and the different demographics. And I think, again, it just shows as people kind of get into alts and learn more about it, there's so much nuance, there's so much education. And I think that's why it's obviously great that public's getting involved, and we're going to be providing a lot of that education, but also places like Altan Insights that do a lot of this research. On that point, I know obviously you've been interested in the space for quite a while. I'm curious, when you look historically, obviously there's been a downturn in the fractional performance of alts in the first half of this year. Is there any, I know this is quite new, like the fractional space. Have we seen this happen before? Is there like a track record of downturns of this scale? Or is this the first time?
I think in basically any one of these categories that we've talked about today, whether it's sports cards, whether it's art, rare books, comics, whatever it may be, this type of drawdown is by no means new. I think it's scarier for people than it's probably ever been, but I think that's because there are so many people that are new to these categories and haven't been through one of these corrections before, and have kind of only known the environment where things have just kept going higher and higher. But there's a lot of historical precedent for these markets resetting, and sometimes in speculative markets values can run a little bit hot, and a reset inevitably comes and kind of returns values to a more reasonable territory, where they can then start to they have a foundation to grow off of in a more steady manner. So I wouldn't say this is unprecedented by any means, but I think it's new for a lot of people, unsettling for a lot of people, and that's okay. That's perfectly natural. But it's definitely easy to feel like the sky is falling in the moment.
Yeah, for sure. And I think one thing I'm really interested to get from your perspective is for that new person who's wants to get into alts, who's intrigued by it, who wants to diversify their portfolio, but is kind of looking at this market and is like, how do I navigate this even? What is some advice that you would have of maybe like resources to look at or ways to even think about finding buying opportunities?
Yeah, I think the great thing about these assets is they're passion assets, right? Like you don't want to kind of enter a category purely because you think there might be opportunity there. Ideally, you're entering it because you think there's opportunity there, and you have passion for it, you have interest in it, and then maybe down the road an informational edge. So my first advice would be to start with a category that you really have a passion for, and then really start to build your knowledge around that category. There's, in any one category, there's a number of resources. You can look at, auction results in that particular asset class to better understand, like, what are the things that have sold for more and more over time, and what are the things that sold really well 5 years ago that aren't selling that well anymore, and starting to find out the answers for why those things are happening. Like, is it because there was a huge kind of glutton supply and demand didn't catch up, or did it just fall out of vogue for XYZ reason? And as you kind of go down those paths, you start to accumulate all this knowledge, and what you'll find that's pretty interesting is a lot of that knowledge can be kind of used in other parallel categories in very similar ways. The assets are slightly different. The forces are slightly different. The players are slightly different, but there's a lot that you can take from one category to another. And all of a sudden, you're accumulating knowledge across not just one category that you knew you were really interested in, but, 4 or 5 others that you realized you were interested in after going down kind of the first research path. But, in any category, there's going to be a wealth of resources, whether it's, prior sale results, whether it's, databases that contain information about kind of the supply of a certain asset. So, for example, in sports cards, you could look at a grading agency who grades these cards, see what the population reports look like, how many Jordan rookie cards are there out there, and how's that changed over time, and how does the value of that compare with, a card that has even less supply. And so you'll find resources like that in each category, and you'll find that your knowledge kind of builds upon itself.
I think it's such a good point, and I think even working in the space, one of the things that surprises me is like the variety in the space. Even in the 5 in 5 headline section of the show, we were talking about sealed VHS tapes and some of the crazy sales that we're seeing there. I've seen insane sales of graded like Star Wars toys from decades past. I'm curious, obviously you're very well versed in alts in general. Are there any of these kind of like fledgling newer asset categories that you've been really intrigued by, that you're kind of bullish on, excited about for the future?
Yeah, I think there's a few. I think one of which kind of came to fruition last year and in the early stages of this year, which was ticket stubs to major sports games or cultural events or moments throughout history. We saw this huge kind of swell in values and interest for collectible ticket stubs. Things like tickets to Michael Jordan's debut NBA game. The population of those things is so incredibly low. And when you thought about the fact that there was all this interest in sports cards, but there was even lower supply of the tickets that were actually in the building for these key moments, it was kind of felt like a no-brainer. And I think you can kind of think about new categories in that way. Like, where is there already a lot of interest, but there's a certain asset that's been overlooked and has a compelling amount of supply, and there's reasons to believe it could go higher. I think one category that's been particularly overlooked still is music and the various types of memorabilia that diehard fans kind of transact in the music space, whether that's concert posters are starting to see a rise in popularity, whether that's vinyl. I think there's some interesting categories that are overlooked. Same could be said about movies, original screenplays, props, original posters from way back when. So I think there are these categories with very rabid fan bases that maybe haven't seen kind of the same appreciation from a collectible standpoint.
Okay, so we're reaching the end of the show. I do have a couple more questions that I want to ask you. Your point on music memorabilia is an interesting one. Maybe I need to start looking into concert posters and all of those sort of things. We spoke, obviously, it seems like we're kind of in a bear market. I think that's the general sentiment. And whenever we're in a market like this, I think about kind of that Warren Buffett quote of being greedy when others are fearful and fearful when others are greedy. Obviously, a lot of these asset categories are coming down right now. Are there any opportunities, things that you've kind of seen that you're like, it's a great buying opportunity right now? Obviously, this is not investment advice. I always put that disclaimer out there.
Right. Right. No, I think this year we've seen a lot of assets and asset classes get really beaten down, and I think that's not uncommon to see. But when you think about things that maybe didn't deserve to be beaten down in quite the same way as other categories, you can look at things like memorabilia that are true one-of-one items with real scarcity that have, seen values go down because people are selling everything. I think a good example on the Otis platform is the shattered backboard Air Jordan 1. Again, not investment advice, but this is a sneaker that Michael Jordan wore in an iconic moment where he shattered a backboard in an exhibition game in Italy. There's literally pieces of glass embedded in the sole. And, that shattered backboard went on to become like one of the most, notable, famous colorways of Air Jordans that Nike produces. And this pair had traded down. I think it recovered a bit recently, but it was trading down, I think on the order of 20 to 30%, and really trading at prices that you'd more commonly see for maybe a pair of Jordans from an unidentifiable rookie moment or a less notable one. So you just see instances like that where, maybe an asset has been, sold off to a point where it's kind of trading with things that aren't as unique or special.
Yeah, I think to your point, and for anyone that hasn't seen that or noticed, I think the story behind the shattered backboard is just such a fascinating story. I know we had Gerard on the show, who's one of like the biggest Michael Jordan game worn like sneaker collectors, and he was talking about it. It's really interesting, and the assets also plan to come onto public in the next few months. But final question for you, Dylan, before we finish, is what do you think is going to happen in kind of the second half of this year from like a fractional alts perspective? I know it's always so hard to give predictions. We won't hold you to it, but what kind of your thought on what's going to happen?
Yeah, I think I think sentiment is still really, really negative right now, and people are still kind of in that selling mindset of just getting rid of risk. And so I don't think we've reached a point yet where that kind of downward momentum is necessarily arrested and reversed. But over time, I think that does abate. I think a lot of these categories, as valuations start to get to levels that are kind of more in line with like 2020, even getting closer to pre-pandemic levels, like that doesn't make a ton of sense, because those categories have undoubtedly added long-term audiences and picked up incremental buyers that are going to be there for the long term. And so, there does seem to be a floor there. I think it may take some time for sentiment to improve, to kind of, get things turned around. And I think that's the case across most markets right now, until we get a little bit more clarity around, what's going on with inflation, if the Fed is getting it under control with its monetary policy. That could kind of help people, kind of put some of that unease to the side. So I guess, long story short, I think there's probably a little more uncertainty, a little bit more volatility left to play itself out here. But, it doesn't seem to me like there's an unlimited kind of downward trajectory. So, would hope to see a floor before too long here.
Okay, that's great to hear. I think everyone's good to hear that. It's been great having you on the show, Dylan. I think you really gave just like a really great overview of what's happened in the space this year, kind of where we could be going in the future. Everyone hit that like button, show Dylan some love. And yeah, we'll close out the show for this week. We'll be back in a couple of weeks with another edition of the Alt Show. Everyone have a great rest of your day.
If you would like to see more content like this, subscribe to our channel and download the public app where you can listen to these sessions in live time.